banks suddenly fail to protect your money. Imagine waking up one day to find that everything you've worked so hard for is trapped beyond your reach. The security you've always trusted could vanish in an instant, leaving you vulnerable and helpless. In just one moment, everything you've built could be lost forever. Could you afford to take that risk? Are you truly prepared for what's coming next? In 2024, the unthinkable will happen. The world's most trusted financial institutions, the bedrock of our economic system, will begin to crumble. As the crisis unfolds, one question will echo across the globe. Should you take your money out of the bank? This will not just be a financial crisis, it will be a crisis of trust. The very institutions we will have believed were safeguarding our future will become the source of our deepest fears. But how will we get here? And more importantly, what should you do to protect yourself? I will try to explain this to you with an example. Meet Jon Tan, a father of two, a man who has always done everything by the book. He saved diligently, trusted his bank, and believed his money was secure. But as the 2024 banking crisis erupted, Jon's world was turned upside down. Suddenly, the idea of keeping his life savings in the bank seemed like the biggest gamble of all. I never thought I'd see the day when I'd be afraid to leave my money in the bank, but now I don't know what to do. Jon's story is not unique. Across the world, millions are facing the same dilemma: stay with the familiar or take drastic measures to protect their savings. As we stand on the brink of the 2024 banking crisis, it's important to understand the profound impact this financial turmoil will have on our lives. Financial crises evoke deep-seated fears, particularly the fear of losing what we've worked so hard to earn. Money isn't just currency, it represents security, the future, and a reflection of our efforts. When that sense of security is threatened, anxiety, stress, and panic naturally follow, often leading to impulsive decisions like withdrawing large sums of money in a desperate attempt to regain control. The impending 2024 banking crisis is sending shockwaves through our financial psyche, prompting many to rethink their financial strategies. But what exactly is driving this crisis, and why are experts urging people to pull their money out of banks? This crisis isn't emerging out of nowhere. It's the result of a series of interconnected factors. Firstly, consider the macroeconomic landscape. Rising interest rates have placed a heavy burden on borrowers, leading to a surge in loan defaults. Simultaneously, banks driven by the quest for higher profits have engaged in increasingly risky investments, often without sufficient regulatory oversight. While this crisis shares similarities with past financial collapses, it stands out due to a crucial difference: public trust. Unlike the 2008 crisis, which saw global government intervention to stabilize the economy, the current efforts have been met with skepticism. Years of perceived regulatory failures, corporate greed, and growing economic inequality have eroded confidence in both banks and government policies. Government policies, particularly those aimed at deregulating the banking sector, have significantly contributed to the onset of the 2024 crisis. By loosening regulations, banks were given more freedom to take risks. When those risks failed to pay off, the fallout was inevitable. The failure of regulatory bodies to enforce strict oversight allowed banks to operate with minimal accountability, creating the perfect storm for today's crisis. As the situation worsens, financial experts are increasingly advising people to consider withdrawing their money from banks. Why? The answer lies in liquidity. Banks operate on a fractional reserve system, keeping only a small fraction of deposits on hand. When many customers attempt to withdraw their money simultaneously, banks can quickly run out of cash, leading to bank runs and potential collapses. During such a crisis, having access to cash becomes crucial. But what are the alternatives for those who choose to pull their money from banks? Some people turn to precious metals like gold and silver, which have historically retained value during economic instability. Others invest in real estate or cryptocurrency, which, despite its volatility, is seen by some as a hedge against traditional financial systems. This crisis isn't just affecting individuals. Businesses, especially small ones, are also feeling the strain. With credit lines drying up and loans becoming harder to secure, many businesses are struggling to stay afloat. The broader economy is at risk as consumer spending declines and unemployment rises. We must also consider the ethical implications of such advice. Encouraging mass withdrawals could worsen the crisis, creating a vicious cycle where the very act of withdrawing funds leads to further instability. Balancing individual interests with the need to maintain financial system stability is a delicate challenge. Governments and central banks are not idly watching. Emergency measures, including bailouts and liquidity injections, are being implemented to stabilize the situation. However, the effectiveness of these measures remains uncertain, and the long-term implications are still unfolding. Historical crisis comparisons? Let's start with the 1929 Great Depression, perhaps the most infamous financial collapse in history. Triggered by the stock market crash, it led to widespread bank failures, mass unemployment, and a decade-long economic downturn. The banking system at the time was poorly regulated, and when panic set in, people rushed to withdraw their money, leading to a wave of bank runs that crippled the financial system. Fast forward to 2008, when the world witnessed the global financial crisis. It was a time when the housing bubble burst, leading to the collapse of major financial institutions. The crisis was marked by a cascade of failures within the banking system, as bad loans and mortgage-backed securities turned toxic. The result? A global recession, massive bailouts, and a re-evaluation of the regulatory framework. The 2008 crisis was largely a product of excessive risk-taking and a lack of oversight in the financial sector. Banks had become too big to fail, and when they did fail, the consequences were felt worldwide. Governments had to step in with massive bailouts, leading to a long and slow recovery. Lessons from history. Each of these crises offers valuable lessons. The 1929 Great Depression taught us about the dangers of unchecked speculation and the importance of strong banking regulations. The 2008 global financial crisis highlighted the risks of financial innovation without sufficient oversight and the moral hazard of too-big-to-fail institutions. The 1997 Asian financial crisis underscored the vulnerability of emerging markets to rapid capital flows and the need for sound monetary policies. Next, steps for individuals. Start by taking a comprehensive look at your financial situation. Review your bank accounts, debts, and investments. Understand how exposed you are to the banking system and identify any immediate risks. Diversify your assets. Consider diversifying your assets to reduce risk. This might include holding a portion of your savings in physical assets like gold or real estate, or exploring alternative investments such as cryptocurrencies or peer-to-peer lending platforms. Diversification can help safeguard your wealth against systemic failures. Evaluate bank stability. Not all banks are equally affected by the crisis. Research the stability of your bank by checking their financial health reports, credit ratings, and customer reviews. Choose institutions that have a strong track record and are perceived as reliable. Consider cash withdrawals carefully. If you decide to withdraw cash, do so thoughtfully. Keep in mind that large cash withdrawals can lead to liquidity issues for banks. Balance your need for liquidity with the risks of holding large amounts of cash at home. Stay informed and seek professional advice. Stay updated on the latest developments and seek advice from financial professionals. They can help you navigate the complexities of the crisis and offer personalized strategies to protect and grow your wealth. Review and update financial plans. Update your financial plans to reflect the new economic reality. Adjust your budgeting, savings, and investment strategies to account for changes in the financial landscape. Next steps for businesses: assess financial health. Evaluate your business's financial health. Review cash flow projections, debt levels, and liquidity. Identify any potential vulnerabilities and develop a plan to address them. Strengthen relationships with financial partners. Maintain open communication with your bank and other financial partners. Negotiate terms for loans and credit lines to ensure access to necessary funds during the crisis. Diversify revenue streams. Diversify your revenue streams to reduce dependence on any single source of income. Explore new markets, products, or services that can provide additional revenue and stabilize your business. Enhance cash flow management. Improve cash flow management by tightening invoicing practices, reducing expenses, and managing accounts receivable efficiently. Ensure you have sufficient working capital to weather financial disruptions. Prepare for contingencies. Develop a contingency plan for various scenarios, including further financial instability or operational disruptions. Establish emergency protocols and identify alternative suppliers or partners. Invest in technology and innovation. Invest in technology and innovation to enhance efficiency and competitiveness. Embracing digital transformation can help your business adapt to changing market conditions and reach new customer segments. Preparing for the future. Educate yourself and your team. Invest in education for yourself and your team. Understanding financial principles and staying informed about economic trends can empower you to make better decisions and navigate future challenges. Monitor economic indicators. Keep an eye on key economic indicators that can signal changes in the financial environment. Monitoring these indicators can help you anticipate and respond to shifts in the market. Foster a resilient mindset. Develop a resilient mindset to cope with ongoing uncertainty. Emphasize long-term planning and adaptability, and focus on strategies that can help you thrive even in challenging times. Advocate for financial reform. Engage in discussions about financial reform and advocate for changes that can improve the stability and transparency of the financial system. Your voice can contribute to shaping a more resilient and equitable economic future. Potential recovery strategies? After the 2024 banking crisis, focus on rebuilding savings and emergency funds by regularly setting aside income. Review and diversify investments to manage risk, and consolidate or refinance debt to lower interest rates and payments. Enhance financial literacy to make informed decisions and explore new income streams for added stability. Adjust spending habits to live within your means. For businesses, develop financial forecasts and contingency plans to manage cash flow and future challenges. Invest in technology and innovation to stay competitive, improve customer engagement with better service and loyalty programs, and diversify revenue by exploring new markets and products. Optimize supply chain management, support employee well-being, and update business models to fit current conditions. Build strategic partnerships, foster adaptability, invest in sustainability, and monitor economic trends to navigate future changes effectively. Ready to take control of your financial future? Start by evaluating your savings and investment strategies today. For businesses, prioritize strengthening your financial resilience and exploring new growth opportunities. Stay informed, adapt to changes, and make proactive decisions to safeguard and enhance your financial well-being. If you found this information helpful, don't forget to subscribe for more updates on financial strategies and economic insights. Like this video to support our channel, and share it with friends and family who could benefit from this advice. Act now to secure your financial stability and thrive in the evolving economic landscape.